Hey everybody, welcome to another trade review for March 13th. We're going to be talking about a trade that I did today, 4,000% gain on Apple. Basically, why I took the trade, how it all worked out, what the thesis was behind it, how I managed the trade once it started to work, talk about how I was scaling out, etc. These types of trades, they do happen on Lotto Friday, especially in this type of market. We have a ton of range, but the key thing to be looking at, especially in this market, is contracts that you think can get in the money if certain things set up. Get these certain big pushes at the end of the day, which tend to happen on Fridays, the last 3 weeks at least. You can kind of use that thesis and use it to your advantage to lock in some nice, profits if you're correct. The key thing is you kind of got to be a little bit lucky, as well as looking at cheap contracts and act on them without, hesitation. So what was the whole idea behind this trade? Basically, what I was looking at was SPY throughout the entire day. I don't know if you guys noticed this last week and this week, especially the market, just continued to sell off almost every single rally. We can see on the hourly chart here that SPY is breaking the downtrend. That was one of the first things I noticed. Broke the downtrend in the morning. It actually retested the downtrend twice intraday and held that level. Now, if it was going to be like normal price action during the week, then we would see obviously it break that downtrend, most likely continue to sell off even more, or even more aggressively like it has been. We didn't see that today, so that was in the back of my head the whole day, and I was kind of leaning more on the bullish side going into the end of the day. We knew that Trump was going to be speaking here. Going into the last 30 minutes of the day, obviously he's going to be probably trying to say something positive to push up the market, because that's typically what happens. So watching the hourly chart, looking at the daily, and there was a couple different things I'm looking at. That downtrend, like I mentioned, watching to see if the market's going to hold it. If we do, stay above that downtrend, we should see continuation higher. I'm also looking at the short-term EMA support. You can see it at 269.77 here. We had room into this area to retest it. I always look at that extension intraday to see if we have room to push back to it. We typically do, and will retest it. Lastly, I was looking at the channel. Now, when we look at the channel that I'm just drawing right now, we can see that when we typically sell off below the channel, we tend to retest it. If we retest the channel, we tend to go to the middle part of that channel. If the middle part of the channel is retested, we tend to go to the top part of the channel, so on and so forth. And because of that, I also had the inclination that we could see a bounce on the SPY. So those are kind of the reasons behind that. Now, if we scroll back and look at the larger time frame again, we can also see a couple different things intraday. Chart was holding up, EMA support. We can see the last days on the hourly. If we flipped it to an hourly, they're on a 10-minute right now. You can see there was an inverted head and shoulders as well. So we're holding through that inverted head and shoulders. There's a lot of reasons to want to be long, even though we were in and are in a more bearish sentiment or bearish market, whatever you want to call it. At the end of the day too, lastly on the SPY, that is that 260 range. And obviously if that level broke, you're going to see a breakout back towards last day's highs. If last day's highs breaks, you get a range break to the upside in the short term. So one of the other things I was looking at as well. On the hourly here, we can see the short-term EMA support that was reclaimed. Again, I'm just drawing the downtrend so you can see where that break was on the hourly. And essentially because of all this stuff, like I said, more of a bullish sentiment. Now, when we get these types of inclinations on the market, we got to start looking at the big cap stocks. What makes sense to go long? What doesn't make sense to go long? We want to look at things that are trading in sympathy with the market. If you see things that are trading in sympathy, we know that if the market pushes, those names are going to push with it. We know that if they don't push or if they break down, the market's going to break. They're going to break down together. You can go after relative strength names as well, or relative weakness names, depending upon what you want to trade. But that's primarily the one thing I want to be looking at. Now, when we look at Apple here, it was trading in complete sympathy. The charts look the exact same. That's how you can tell if it's trading in sympathy with the market or not. Inclination was to take some Apple Lotto calls long, basically on the reclaim of the 50 EMA here, looking for a retest of this range, 263.92. If that level or if it reclaimed the EMA support, figured it could get into that level. The calls I was looking at were the 270s, a little bit far out of the money, but I figured that they're cheap. If we get a little bit of a movement on 11 cent option, it should push up at least 100%. What I like to do on lotto contracts is take decent size, make that 100%, I'll sell half, trade becomes a free trade, and then you can just hold a position and you have a lot more conviction in that trade, meaning you are, not going to be as pushed to sell it for a profit because you technically don't have any risk on that position. So that was the whole idea there. Now, the trade ended up breaking through, obviously, that intraday range. And once it broke through the intraday range, the probability was high that it was going to go to last day's high. Once it broke last day's high, the probability was high that it was going to fill the gap throughout the last couple days. Now, obviously, because of all this, led me to look at those 270 calls. I was looking a little bit past it. What I was thinking was we'll get a break of the intraday range. We'll get at least to last day's highs. And what I want to do on Lotto Friday is look for a contract that's out of the money that I think can get close to or in the money. Now we got a little bit bigger of a push through that resistance level into that 270. Obviously we went 10 points above the 270 level and we filled the gap, which is great. You always want to be a little bit forward looking, but the whole inclination behind it was I want to try to get these contracts into the money or as close to, and then I can sell them for at least 100%. That's kind of the idea there. So that was the main reason. Let's take a look at the options here. Just going to flip it over to the 270s. There we go. So this, you can see the buys and the sells, and I actually made a mistake intraday. I was trying to add into the contracts at the end of the day, and I actually added 10 times what I wanted to add. So immediately I just corrected that mistake. But you can see the buys and the sells here. I'm just going to flip the chart to a 1 minute. There we go. So on this trade, you can see the original buy, which was earlier, bought it at 11 cents. Stock pushed up to 22 cents, aka up 100%. Sold some. Sold a little bit more at the 15 cent area. So I had, locked in the 100%. The trade was free. I actually locked in a little bit more so I would have profit on it no matter what. And then going into the end of the day, I wanted to add into the position because I figured, okay, I think we're going to get a push. The market looks like it's perking up a bit. That's what I was looking at there. I'm just going to try to actually make the base a little bit wider. I can't flip it in the settings. Never mind. Anywho, so I can zoom in here. I can show you. So there was my ad there. Added some more at 10 cents, which actually added a little bit too much. And then immediately I sold some at the 12 cent area to reduce it back down to what I wanted to hold. And as it started to push, the one thing I was looking at were those next levels, the high of the day, and then looking at that gap fill area on the daily alongside my options. Don't watch the P&L, just let it run. So I was selling some up, 400-500%. I was selling some up at 900%. And then the last, quarter, I was just trying to let it run as much as possible. And at that point, we got that parabolic push into last day's high. And once that level broke, it really started to move to the upside. Obviously, when you get these contracts in the money, they're going to go up exponentially fast because the delta becomes 1 on a Friday right before expiration. And that's the case, every single dollar increase, it's going to push the contract up a buck. In this case, that's 900% every single dollar it's going to go up. In the end, I ended up leaving, obviously a lot on the table because I sold it for just under 4,000% gain. It's like 3,970%. I just rounded up. Figured what the hell. Because we're getting so close to the close, I didn't want to hold the contract through the expiration and get assigned the shares. And the reason why is, markets, basically gapping up and gapping down like 10, 15 points every single day. Especially on Apple, I don't want to hold something like that. So I just figured I'll lock it in. So you can see, my sells here up 2,000%. And then the last sell was up that 4,000% area, $4.50. Again, wanted to sell before the close. There was a minute left. You can see that last 1 minute spike, pretty big spike there. But all in all, pretty good trade. Obviously got lucky with it. The biggest thing here is to have that conviction to hold these positions when it's working. You don't want to just cut them off. That's how you turn a 100%, 200% trade into a 1,000% trade, is when you get the momentum and you get that strength behind it. Just let it run. Move your stops up, scale out your position as it moves. Try to make sure that you've locked in enough profit so that trade becomes free. At that point, I always find your conviction is going to increase on the position to hold it longer. And as you start to see sellers into the L2 or start to see sellers into a resistance area, that's when you want to try to get out of the rest of that position. But all in all, fairly basic trade. Ended up just getting lucky with it. You do, on Lotto Friday, tend to get into these positions that sometimes, if there's news behind them, they can go up exponentially fast. It's happened multiple times this year. But anywho, that's pretty much it. Just wanted to break down this trade for you guys, the rationale behind it, because I had a lot of people asking about it, kind of the thought process. There's not really anything to the setup. It was just a thesis of the market's holding up. I'm going to go after something trading in sympathy with it, which was Apple. Look at a contract that you think can get in the money, and that's pretty much it. So that's it for today, guys. I'll see you guys next week. Probably get another trade review. I'm probably going to post this one next week on Thursday, just an FYI, because I got another video coming out today. Or that came out yesterday, actually. So, but yeah, anyways, if you guys have any questions, feel free to reach out. Spartan@spartantrading.com, or you can visit our website, spartantrading.com. Thanks.